Okay.
Still playing, or am I just not thinking?
Nothing's happening. Something muffled as well. Sunny.
All right. No
Uh,
intro. No intro. Let's just get right into the mix. Good morning. Today is August 16th, 2023. Bender is not with us. However, we shall do the quick nuts and bolts of the activities overnight. Our new reality here in America is bad data is good because they're afraid all over again that interest rates need to go up because people won't stop spending, and inflation ultimately it's going to go higher because of it. Yeah. We also get minutes today, so we'll actually get, in theory, an idea of what they have to say or what they said, several weeks ago. So, yay, fun, cool. Yesterday we saw some topsy turvy type action, with ultimately resulting in a pretty decent sell at the end of the day. I did not enjoy that sell. It was not fun for me. I thought it was really stupid. But if you go back and you're being an honest broker and looking at the chart, you will ultimately come to the conclusion that ever since we made that run up on Monday, it is lower, 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 lower. And we continue to wibble wobble down, and we're getting close to that infamous 44.48, which everybody's like, that's where everybody's going to die, 44.48. And we are sitting there just kissing it, licking it. A lot of kissing, a lot of licking. No penetration just yet. We may get there soon. With this being said, I don't know. How do we want to do this? Do we want to do Sunny? You want to give us some news and then we go to Stonk?
sure.
Yeah,
All right, let's do it, Sunny.
Let's do
What
it.
you got, man?
let's do it. Pretty weak on the news side again. Not much coming out. I think everybody's waiting on those minutes. Coin got a pop this morning, so they got approval to by the NFA to trade crypto futures. So I had mentioned about this, some news coming out, and there was an 85 call flow. I think Friday. I didn't put up on a play till like yesterday, late afternoon. I mentioned I'm going to put up a play on this, so I'll probably be cashing that out this morning. Intel had walked away from its acquisition of Tower Semiconductors. There were some delays in getting approval, so they decided to just walk away, paid a $350 million fee in the process. Target had the year this morning. They they're guiding down lower sales, profit expectations, but it's getting a nice pop this morning. So watch for Walmart also to put up similar numbers, commentary, and get a pop on that. They're both the same sector, kind of run together. Tesla cut their prices in China across the board and took a little dip. Recovered from it, I think, this morning, somewhat off most of it. Um, Upgrades and downgrades. So CVX, PXD, Oxy, you see the theme there, all got upgrades. Getty, GETY, it's a name from the past. We've traded this before, had a high short interest, used to run quite nice. That's it, got a price target update also to $6 this morning. And the other one is KDP. Downgrades, the only one that interested me was SKT. And price targets upgrades. Kava, so they had their I believe, the other day. They came out really nice. Got a price target up to 55 and 58 from Bade and Stiefel. Nvidia also got a price target upgrade to 500 from Raymond James. And Home Depot had the the other day. Got upgrades from Barclays, JP Morgan, Morgan Stanley, so up to 330 on that. Um, so that's it. Again, on the news side, it's pretty weak. We all know the China news, what's going on there. Other than that, I haven't seen much.
Yeah. So we did penetrate that 44.48. Um, that was some penetrations. There was some volumes.
Yeah, so my numbers are like 44.38 and below. I think we go down to 44.30. That would be the place to short. Upwards, I'm looking at 44.60 to go long. Between 44.60 and 44.54, I'm looking to go long if you go.
Yeah, they done did it. Again, another set of good data. Very nice.
Yeah.
Well, thank you there, Sonny. Stock. Let's see if I can make your screen come up.
Let's try it. I'm throwing it out there.
I know, man. All right, so you're requesting. So I say this. Is it? Did we get it?
We got
Whoa,
it.
whoa.
All right. All right. Let's do this. Usually I'm waking up and listening to Fender, so let's see if I can get this going here. Why don't we look at a clean ES to start? We'll go to the daily and we'll recap Fender's epic call yesterday. So Fender caught the bottom yesterday, and it was based on this line here. This was a daily fair value gap that coming into yesterday would look like this. And so he caught that little bounce there because we filled this in. So that was a nice little move. So basically what we would be looking for now would be if we had a candle close below this line, that 44, 48.25 that you've been talking about, then we would be looking, we would think this area would become resistance and that anything back up into this range would be potentially shortable. So that's kind of the picture there on the daily. If we zoom out, I'll jump into the chart with all these, with some more markup here. The big next thing I'd be looking at was this monthly gap, which is going to be here to here. So that's a big range. And then what we would look for as well, we could add things like we would add a fib to this. The 0.5 fib. And so we could be looking, if we get down here on a monthly, that there's you would want to mark up. You can divide this into sections, a bigger gap like that. So with that 48.50, that'd be a big drop. So we'll jump into a smaller time frame chart and we'll take a look at some of these lines in detail. All right, so there was equal stops here. This was basically yesterday's low that we just grabbed. So now it's like we'll be looking, was this a stop run to just grab some bull stops for a run higher? Or, is this a move down? So for downside targets, I have this daily order block line that's based on, so again, those are, a candle that flows in the opposite direction. Basically like this candle here is why I have it marked. So it's a down close candle, which we would say, oh, that might have been a bull that wanted to get things to run higher. So if we run down into this, I'll be looking at that. And then all this orange is that monthly gap that we looked at below. So that's all potentially would need to be rebalanced on a monthly time frame. So that could take a while for us to get into all that. We flip back to the hourly. We've got this kind of fallen channel we've been stuck in. What's interesting about this gap above it, so if we want to start getting upside targets, so this would be a first one on the ES to the upside 44.60.5. It's essentially the same as this gap here that was overnight. So we closed the day with this hourly fair value gap, which is here again based on overnight price action. Will run up and then that. So we grabbed these stops. I could see that maybe being just a little grab to push it higher, but we'll have to see, what we get in the flow. So that's kind of what we're looking for. I'll keep the ES up and we can talk about it during the day. Jump over to the NASDAQ, very similar in that, we didn't have a ton of action overnight. We've got a gap here on the hourly. This one, small one. Pink line's our new week opening gap. And then this is going to be an important level here to hold right here. This 1570.50, just can see a lot of bodies of candles and kind of would hold it. I think it was even clearer on a 4 hour there. Yeah. So we come back here, we bounced off that level. All the bodies respected this level. So we want to see, what we've got an hour on this 4-hour candle. We want to see it continue to close above. And then similarly, on longer time frame, we've got this open area below, very similar to the ES. And then we've got this kind of trend line here who, continued to the downside and got into this orange area there. So upside targets, go back over to that hourly. If we can get through this, then we have this is pretty much balanced price action until we get up this gap up here. We can be looking up into that 15,303. That'd be a big move, but not impossible the way we've seen. So kind of going to be watching the flow. Let's see, Russell. Let's check it out. So Russell, again, similar. We've got our stop grab, equal stops below. Yellow box is going to be a daily fair value gap below. We left another small little gap. They all have this little gap above. So this one would have room. This would be a first upside target, 1907.9. And so we'll kind of just see what we get. And then this next one above is going to be on this 4-hour time frame, small one. The next upside target could be that 1914.50. So we'll see what we get again. Just going to kind of watch flow, check out the price action, take it easy. Let's see, we can do some individual tickers as well. Let's see, what do we have? I'm just going to look at Apple again today. Apple's just kind of stuck here in this channel. And this 177.25 dark pool has kind of shown its importance here. So we lost it. What I may do there is just, we could look for that break to the upside and then just look for this level down here, that previous low. Make sure we hold that 176.55-ish. But yeah, I'm going to keep an eye on that 177.25. It's been a really important level past, I don't know, what's that, week and a half, past 9 days. This level just keeps showing its value. So we want to keep an eye on that 177.25. And then AMD was sitting right, just lost this big dark pool here from back in July. So AMD, I'm going to be focusing on 110.95, which is now above. Almost kind of looks like a little flag there on the hourly as well. So trend line here. Let's see. And then below, we've got 109.50. So I'll be watching the reaction. If we're pushing to the downside of what, I guess first you could look at this one here, 110.15, and then 109.50 there on AMD. I think
AMD
that's all I
flow
got.
wasn't all that bad for the weeklies. It really wasn't.
No, not too bad. Yeah, that was one that was like, they weren't hammering it to the downside at all, for sure. So yeah, focus on this big dark pool, 110.95. Got to pop that. The next upside target, we're looking at 113.25. If we lose 110.20, we got 109.50, and then maybe something down here. That's kind of what I'm looking at for today. I think that's it.
All right. So look, do we have any smash burgers? Do we have anything in the mix? What are you looking at specifically? I know I'm looking at a couple of different things based on some of the flow that we saw yesterday, like this 365 level, 365 to 364 level on Q. And then SPY, there were a decent number of 442 puts that, kind of on that downward draft yesterday. There were a few of those that came through. After hours, the flow was had more of a bullish tilt, but we're coming into the morning with a kick in the face. So the question is, what are you seeing specifically? And if you want to talk about the NQ, that we can totally do that. Or if you prefer SPY, they're all pretty much traveling together in their own little way.
Yeah. So this was actually an interesting one. We can do SPY versus Qs for the same time. So we can just kind of do a side by side here. So this was interesting yesterday. I actually did not set an alert on the SPY smash burger. I only set it on the Qs. And let's clean this up. All right, so the smash burger going into the day yesterday. Again, this is a failed breakout concept here. So here was what was yesterday? Yesterday was Tuesday. So here was this was Monday's price action. So we got a close above Friday's high on the SPY machine. So the entry, it was a short setup, it was a failed breakout up, and so the entry would have been to short Monday's low, and then you would have caught 2 points on the SPY, nothing crazy, but the Qs didn't do it, and that was the one that I had an alert set on. So the Qs, Monday's price action closed above Friday's high, so we'd be looking at a failed breakout to the downside. Now, so we had an inside bar on the Q daily, a little bit tighter price action. So now, you could be more aggressive and just trade the range as a daily inside bar. So a breakout out of yesterday's range will automatically catch someone on the wrong side, and you can get a stop run. SPY, because we had a close below Monday's low, this creates a smash setup to the upside. So if we broke yesterday's high to the upside, we could take SPY long. Whereas Q being an inside bar, you potentially take the break out of yesterday's range versus SPY would give us another failed breakout to the downside if you took the break above yesterday's high, if that makes sense.
So do you feel like right now and looking at everything that we're pretty much in a holding pattern? Or right, I'm trying to get an understanding, not only for myself, but anybody listening, like when we're looking at these charts, what are we seeing? Are we looking for more downside, or are we looking for, maybe kind of stabilizing and evaluating where we're at?
I think it's the latter. To think about, if we try and like picture the macro that environment that we're in, it's like we survived the big ERs. We are waiting on the next Fed meeting. We had our massive run up, and now everyone's kind of like, okay, now what? What an inverted yield curve says there's maybe a recession coming, but there's no signs. The economy's strong, the jobs are good, the CPI was fine. So it's like maybe we need to build some structure and wait on whatever is going to be the next thing that could create a big move. It's like everyone was, and they're obviously not, making it easy. We've had maybe one trend day in the past 2 weeks or something, which like we're waiting for trend days. That's what we want to make the easiest trading, to just buy the dips and hold and close at the highs or close at the lows. But we're just not getting that kind of price action right now, which kind of, it signals that we're just in a battleground right now. That's just kind of my take, that's what just kind of seems like. I don't know. What do you guys think?
Well, I think your assessment is fair. It's like you brought in the narrative into the charting, and that's where it gets a little bit squirrely. It's like, the market is supposed to be a forward-looking instrument, and forward-looking, I think we would be naive to say that run up, even the most bullish of bulls, didn't look at it being like, this is a little bit stupid. This is a little bit, out of whack. Maybe to the same extent as far as saying, hey, dipping down and working into that, 3,800 level that we did. Maybe that was a little bit over the top. Maybe that was a little bit out of whack. So that return to mean, if you will, that we're kind of in right now, as far as finding that quote unquote fair value, quote unquote, market price discovery, whatever you want to call it. We have to rediscover that in some way, in some capacity. Right now, I can say that good data, the way they're reading it right now, good data is being negative because of the threat of additional interest rate. Last 2 to 3 data points have come out that way. We've sold off of good data. We did it again this morning. We did it yesterday after a pop and fade. We can also look and see that the dollar's been, not very friendly as far as its move to the upside. But we've also seen environments where the dollar has moved higher and equities have moved higher at the same time. Again, it's a matter of rediscovering that equilibrium. And I think Benner and I were talking, I think yesterday, day before, we could have another, I think from here, maybe 200, 150 to 200 more points down on the NASDAQ before we get one of those meaningful rippers, meaningful bounces to the upside. That'll put us in theory, it's like we saw Nvidia go from 400 to what, 450, 460, whatever it did in like a day.
15% overnight.
Right? So it begs a question, and we know that Nvidia flow going out to October is mind-numbingly bullish. We know that also. So it really begs the question once again, what are we doing? We're not seeing massive downside bets being placed. That I can say for sure. This has been a momentum run. Every day is a new day. But ultimately, when you look at the daily or a 4 hour, 5 or whatever your cup of tea is over there, it's not looking all that spectacular for bull when you continue to make lower highs over and lower lows over and over and over again. That's not the right recipe, but maybe we're close enough to where we can get a meaningful bounce. Maybe. Those are my thoughts as of now.
Yeah, that makes a lot of sense. I think another thing that we can kind of keep in mind is like, this, because of all these other factors that we're talking about here, this can become a little bit of like a stock picker's market, because it's like if the indices are going to be really tricky, reversal days, no trend days, it's like you can be looking for flow in some areas that maybe like cyclicals or staples. We saw really great flow on Walmart, things like that, where it's like that can be your time to take your shots, especially if you like to trade and hold commons. You can, find, we've been seeing little lines into what yesterday CLSK, some random crypto miner, and it's like you can kind of take your shots based on, we have access to the flow, and based on the fact that the indices might be a little bit trickier to trade in this environment, you can be a stock picker, which I think there's some opportunity there.
Yeah, and I think we've seen money coming into materials. We've seen that
Right,
for sure.
Yeah,
For sure. Alcoa also, it's like we've seen it come in. But we've also seen good bottoming flow on Meta. We've seen good flow on Microsoft. Nvidia, a league of its own over there. Apple, Tesla, kind of in the same boat. You're not getting, flow that really, really offers directional other than the 227.50s that came through on Tesla. I think end of last week, we saw that activity, we saw that action. So it's like we're not getting and you're saying stock picker, we're not getting that aggressive directional push. We're not getting that as far as the broad market. And it's like you can look at a number of different reasons why. Again, if you're for a forward-looking instrument, I think one of the things that is going to continue to be a sticking point for how we look at things is going to be when the student loan debt comes back on. I posted something in Roadhouse earlier today, this morning, kind of showing the delinquency. There still aren't any delinquencies because payments aren't due yet, right?
Yeah.
But we've seen an uptick in mortgages, credit cards, and what's the other one? Mortgages, credit cards, and auto loans, without having student loan debt on deck. So that's not a doom and gloom type of a scenario. That's just like, okay, so if bad data is going to be good, if this comes on and those delinquencies start pushing through and data starts cracking, that means that they're going to lower rates. That's not bad for the market, right?
Right.
So
Yeah.
it's especially if they're going to treat good data as bad like they have over the past several data points. This is where it becomes picky, and I think you really have to be, like you're saying, selective in what you're playing as far as the individual tickers. And if you're trading the indices, be ready to be very, very fluid in your movement. You can't get stuck to an idea, and I know that can be difficult for me. So, anyways, you got anything else, Sonny? You have anything else?
I'm good.
Sunny Bale. Damn it, Sunny. All right. Anyways, all right. We have about 14 minutes until open. 14 minutes until open. Let's get comfortable. We know where they put it. Sun gave some of his levels. I know a lot of people are watching this 44, 48. And then, as far as his breakdown, let's see what happens when we try to retest it. If we reject that, it's provided some pretty good support. But if we reject that on a move up or move up and over and lose it again, it can get pretty messy. Otherwise, we have to look to the upside if we're able to take it and hold from my standpoint, and that's how I'm going to be looking to attack today. That's all I got, boys and girls. Thank you very much for listening. Ladies and gentlemen, we shall see you tomorrow. Thanks again.
All right. See you.